The major movers this week. Market liquidity is thin. CTAs and corporates are buying. Jackson Hole, Fed had a chance to cut on the forced selling that we had into August 5th. They chose not to. That gave vol sellers clear path to just hammer it, and market went higher. And you can see this from 8/11, this timestamp here, right, where we had this reflexive bounce and a pullback in concentration risk. Now let me show you what it looks like now. Look at this bounce that we had right here and trounce that we had right here. This is not done though. We have this ratio hasn't even made it into the 2020 lows. This is a massively reflexive bounce that still has a massive divergence. That's all.
This short clip is presented by Club. Club provides access to Samantha LaDuc and her team of professional macro and micro traders, analysts, and educators. Club is ideal for active traders, investors, and institutions who want Samantha's best-of-breed market timing calls across all asset classes and time frames like chase, swing, and trend. Get the trade before it happens. Sign up to Club now and get full access to daily live trading room with Samantha LaDuc, Slack trading desk with detailed analysis and trades, custom trade support when you need it, and much more. For more information, visit www.LaDucTrading.com/club.
I sent this chart to Hans, and the reason we were talking about Nvidia and bullishness and all that kind of stuff about the market, and I wanted to show something to you, which is semis. We'll kind of talk about time frames matter. I know there are lots of folks that chase, and I am not focused on the chase. I want to know why the market's moving and really just how to trade it given a more longer duration, not intraday and not zero DTE. So you know my focus is more on the swing, macro trends that are durable, and then everything that has to do with oil, dollar, and yields. And this makes up my backdrop, the macro, the intermarket, etc., that I then can look at technically to say, okay, I can see directional changes, there's no question. The intensity of a change is triggered by volatility, which is why I study volatility so darn close. But the duration is harder. So let me explain. So here's semis on a monthly. And I'm going to talk trend swing because I think time frames matter. And this is on a monthly, and you can see how it did beautifully since the January 2023 low. Obviously, this is down here. I should have taken a little bit more to the left, but the point is we got above and right here above the 10-week, and we stayed above the 10-week, 10-month in this particular case. Look at that beautiful Morningstar reversal, continuation higher, and here's that 10-week. So we went and stopped going up, and then we had a big shake and bake. Again, this is on a monthly. 240 to 290 is a lot in SMH points. And then this past July, it opened very poor. It opened below the prior close. We dumped all the way down and through the 10-month, which has not happened this entire rally. Obviously, we've got some fragility in the market. We did get supported at a monthly, and it was definitely an outlier. But my point is, this is the first time we had a 10-month mean test or tag. And you know my saying, the first time it tags, the second time it breaks. So this is on a monthly. That's not zero DTEs. Okay, now I go to a daily just to kind of give you a little what I envision. We've had a very strong 200-day ascending, not descending, ascending, smooth. Market's been rallying as semis have been in some distribution. So big picture, we can still have months. Like this was literally February, March, April, little dip. This is May, June, July, and a big dip. And now we can have August, September, October, and a bigger dip. My point is, pace yourself. Now, also I can say, honestly, that head and shoulders can be continuation, not just reversal patterns. I know this technically, but I have my doubts that earnings are going to delight in 2025. And I have already mentioned that I think we got maybe 2 quarters left this year before we start to roll over. So this really is just big picture. We've started this distribution of sideways. We did a perfect cradle formation. Remember, this was my price target right here because it's a cradle formation. And sure enough, we tagged it perfect, literally. And then we had a massive reflexive bounce. And that's what is now trapping what I think what is trapping bulls. Now let's take a look at Nvidia. Very different. Time frame is the same. Look at this monthly. I should have had January, but the idea is you follow this 10-month Beautiful, beautiful. Now it's getting extended. Oh my gosh. We happen to luckily time that perfectly because my fib level of 137, 138. And then we saw literally this 147 real time tag and get rejected and roll over. So that was a perfectly timed, yes, chase short, but I was trend waiting for this 137, 138 in my fib level. Anyway, I've got it on a monthly just to show you the range. We came down 1 month. Okay. Then we shake and bake 1 month. Okay. But we're heading to that 10 month. And sure enough, we did the same exact kind of thing. We came all the way back down to the 10 month, the Keltner, and that's a tag. First time it tags, second time it typically breaks. Now, if I go over to a day time frame, you can see that this 200 day is still ascending, very bullish. You can also see right above this 200. Once it got above the 200, it was really, it's been above the 200. We haven't come down to the 200 in Nvidia. We're not there yet. This is a massive range from, let's call it 141 to 91. That's a big, big range. We can do a lot on all time frames. This is just digesting on a monthly. Does that make sense? This is on a quarterly if you really want to get crazy. Look where this mean is. Way the heck down here, about 70. So if Nvidia really wants to get busy, not this month, I think we've already kind of made our range here, but we break 116, this is going to start rolling back over to that 90. It's just on a monthly, we're just going sideways. It's been in distribution for 3 months with some wild moves from 141 to 91. But honestly, this can take another 1 to 2 months before it rolls over, and another 1 to 2 quarters, 1 to 2 quarters before this thing even comes back down to the mean, which is like that 70. So I'm just trying to kind of how I look at it. This is how I look at it. Big picture. I saw the distribution. We caught that downdraft. You got a reflexive bounce. Probably goes a little bit more sideways than folks would like.
Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.